When it comes to decentralization on exchanges in the cryptocurrency space, there are still a lot of questions that need to be answered. Decentralized exchanges do provide users with a more secure experience. After all, they are less susceptible to hacking than their centralized counterparts. However, how can decentralized exchanges stay compliant with international laws? And should institutional investors keep custody of the assets they trade on a decentralized exchange, or should they entrust them to a third party? To get the answers to these questions, finance magnates sat down with Fabio Canesin, co-founder of crypto trading firm Nash and founder of the City of Zion open source community. Canesin will also appear as a speaker at the upcoming Finance Magnates Barcelona Trading Conference on July 10th and 11th. To learn more about the conference, visit btconf.io. The audio on this podcast is particularly sensitive, so we recommend using headphones for the best results. Fabio, can you start by just telling me a little bit about yourself and how you got involved in the cryptosphere in the first place?
Right. So I'm actually a mechanical engineer by training. So I did my bachelor's in mechanical engineering at Federal University in Brazil. I did a master's in computational mechanics on the Federal of Rio de Janeiro in Brazil also. Then I was actually already working as a researcher on that period when I was doing my master. I was hired a little before graduating to work on a big research center that a company called Schlumberger, which is a oil and gas service company, was building in Brazil. So Brazil had just discovered these massive resources called pre-salt, and I was working on that. And basically, I was doing computational mechanics. And a new application of computational mechanics at the time was to use GPUs for programming. And while learning GPU, this is like 2009, 2010, I actually got in contact with miners. Right? So the first applications of a language I was learning called OpenCL was actually Bitcoin miners. And that's how I learned about Bitcoin. But it was not my job, it was not my priority, it was just an interest. But as anyone in technology at the time, it was very interesting example. Everybody believed it was an experiment. I think very few people believe it would be $100 billion business. Then, if not, they would be paying so much. But basically, I continued my career. Then I moved to US in a research center in Cambridge. And basically, 2016, by the end of 2016, I contacted a friend of mine with whom I had a startup before, talking about the need to do something into blockchain, because with this international movement that I had, so I actually passed through many countries by training and work on my previous job. And it was always a struggle to move money around, so I knew about the problem on a personal level. And I wanted to actually build something that would allow people who is mobile like myself, that they would be able to participate in this digital economy. So the idea was to build an exchange platform for compliance across different countries. And that's basically when we decided to go heads-on on blockchain. And so by the very beginning of 2017, we were already looking at where we're going to build it, how we're going to build it. And that's where we actually decided to bet on Rio as a platform, because at the time, it was the only blockchain who had a single block finality, we call it. And that was very important for financial applications. And then the rest is history. So basically, me getting blockchain was a process from 2010 to 2016 of my engineering career and blockchain running parallel to it.
Okay, and then so now you're heavily involved with a company called Nash. So what exactly is Nash?
So Nash is what we call a fintech that uses blockchain as infrastructure. So basically, the idea here is that finance is becoming digital. So people is giving up their more traditional banking infrastructure to actually have mobile banking, to have web-based banking only. So it's a tendency across the globe. It's not only Europe or US. There's very strong mobile banking players in almost every space right now. And the idea of Nash is if this is really a tendency on finance, right? So we are digitalizing the interfaces for finance. So the next step to actually digitalize these assets. So what you hold in your bank today is not digitalized. It is represented in a digital form, but the asset itself is not digital. So in the sense that it is not native to the platform. So we believe that the assets will become native to the platform. And when you look around and see which are the technologies that are more suitable to finance as a background, and blockchain is like the obvious candidate. So with this core belief that currencies, securities, everything will be moving into blockchain, then we look at it and say what we're going to be needed, the services there. So the first one, which already has a business case, is exchange. So people need to trade between investments that they have, or disinvest or invest in different assets that they deem good opportunities. So what we try to do is, for the profitability of the company, the first product that we would launch is this exchange. It's a very complicated description, but basically our belief is on the digitalization of the assets. And when you believe in something like that, it actually brings a lot of technical complexity. So one example of this is, why do we believe assets are being digitalized in blockchain? It's because of the properties of the asset. So when we build an exchange system, we try to keep the same properties. So the properties is self-custody, is fungibility, it's all those properties that people know about Bitcoin, Ethereum, and so on.
So can you tell us a little bit about what Nash's current projects are?
Right. So the first product is all about realizing that initial vision. So it's a funds management tool. It's a place where you can manage different assets. People already in blockchain can think of it like a multi-wallet system. Mm-hmm. And who is not familiar with blockchain can just think about as if it is your online banking. You enter on the website and you see all your assets. That's what we are aiming for. Mm-hmm. And this is completely self-custodial. So we don't control the funds. The user has full control of the funds, which is, again, on keeping the properties of the assets. Then interact with that funds management, we have an exchange, and that's what people call a decentralized exchange, because, again, we don't want to control the funds while these trades are happening. So, because if we did so, we lose the properties of the assets again. So the first two products is the funds management tool and is this exchange solution. The problem that becomes here is this is all for people who already have digital assets, right? So it's a place for you to store, it's a place for you to trade. Then we actually built as a sidecar on the exchange, a solution where you can buy and sell crypto for fiat using third parties that want to plug in your system. So basically, business can plug in our business and provide their services through our interface.
Okay, I see. So in that case, then when users have to this third party system to buy and sell cryptocurrency, what are those platforms mostly routed through banks? Are they routed through things like Western Union or PayPal? Do you know anything about the specifics of the onboarding and offboarding from fiat into crypto?
Right. The fiat into crypto is each partner has different systems. So, for example, the two main partners right now in US and Europe, they integrate with the banking system like people is more used to. So, for example, if you are using you are in US, you're going to be linking your bank account using Play, all that workflow that people are using in other services like Coinbase. On Europe, you will have to actually send to an account on most services and use the identifier. So it's a very traditional workflow on those ends.
Okay. And as for the exchange itself, what's the primary way that the exchange makes profit? What's the
right? So we have a model for fees. And basically, when you are trading, you have two sides, what we call the maker and the taker. The taker is who is buying on the exchange. So this person is removing assets from the pool of assets. So this is why we call it taker. So the takers are the ones that pay fee. Whoever is selling pays no fee on the exchange. And we have a table of different levels of fee that you pay depending on how much volume do you move. The maximum fee that we charge is 0.25%.
Okay. Okay. So I'm curious. So this exchange is a decentralized exchange. Is that correct?
Yes, it's a non-custodian exchange. Yes.
Right. So I'm wondering, like, from your perspective, do you think that decentralized exchanges are sort of the way of the future? Are they, will they eventually overtake centralized exchanges, or do you think that these two kinds of entities will always have their individual roles to play in the cryptosphere?
Right. I think the problem is custody is not itself how the trade happens. So I do believe that there will always be a level of centralization because you need that for compliance. So for a business to comply with anti-money laundering laws, you need to do authorization, right? So you need to allow who trades or not. So I believe this will always be there. But in terms of custody, I do think that we'll have a strong movement for self-custody. If not self-custody, the custody of the assets will not be on the exchange side. So you can think, for example, if you are an institutional investor, you have a contract with a professional custodian. So people like BitGo, for example. So they have the custody of the assets. And you can trade on an exchange like Nash, but Nash itself has no custody of the assets. So the importance here is whoever is intermediating the trade cannot control the funds. It's not especially after that where the custody lies, because for different users, there's different needs for custody. So on an individual level, at the retail investors, I do think he will have self-custody. So he will control their funds. But as we grow on institutional sizes, they will have a third party who will handle them.
Okay, so you think that centralized exchanges do have a role to play in the future, basically?
Yeah, I think that even centralized exchanges will have to become non-custodial in the future.
Okay, right.
So if you are like an endowment, if you are a Harvard University, and you want to do investment on some token, right? Some security token or some currency token. You don't want to put all your assets on an exchange and trust the exchange. What you want to do is you want to provide proof that you are engaged on this trade. So even centralized exchanges, I believe they will use systems to manage custody much different than they are today. Because right now, you can transfer your asset to them and they have full control of that, right? So if they have a security breach or if they, inside the company itself, they have a problem, it's all on them. And as we move to a more compliant, more professional setup, I do think this will change.
Yeah, I mean, that sounds like a great idea. And I'm wondering if you've seen like any movements toward this amongst,
Yeah, well, I would like to say this is my idea. It's not my idea. If you trade today, but it's true. If you trade today in New York Stock Exchange or in Nasdaq, they don't have custody of the assets. There's a third-party custodian. There's a centralized custodian who actually holds the assets. So this is basically how the world used to work before, and what we are doing is building this infrastructure using this new technology.
I see. So, kind of along the lines of speaking of the ways that traditional exchanges work, all around the world, we have regulators who are slowly and in different ways working to make cryptocurrency exchanges a little more secure, or at least making it so that cryptocurrency exchanges have a little bit more data about their users to prevent things like financial crime and money laundering and funding of terrorists and all that good stuff. So I'm curious what Nash's AML and KYC requirements are at the moment, and what the sort of philosophy is about AML and KYC on Nash's.
Right. So I myself will say this is my position as co-founders. I think we believe very much that these kind of blocks are very needed. So maybe most people from advanced countries will not notice this, but as someone who grew in Brazil, you learn that anti-money laundering laws are sometimes the only tools prosecutors have to go after corruption or other kind of scandals that happen across the world, right? Mm-hmm. So I do think it is very important, and we are going to be very compliant on that sense. The way we operate on that is based on volume. So depending on the volume that you have on your daily trade, you have different requirements of know your customer, right? So we'll call KYC. So if you trade $1,000 daily, there will be no need for personal identification. That's basically because if you are doing this kind of trade, it's very unlikely that you are engaged in one of those problems. Mm-hmm. But if you move more than that, then you need to do proper KYC, where you need to verify your identity and so on.
Mm-hmm. So that I really think that's an important point about using anti-money laundering laws as tools to go after corruption. That's not something that's really talked about very much. I'm curious in your own personal experience and in your exchange, in your experience as the co-founder of this exchange, how your experience has been with fielding requests from regulators and law enforcement entities as far as maybe getting subpoenaed for data or simply getting asked for to be perhaps an advisor on regulatory things, because there's a big concern in the cryptocurrency industry, as you know, about regulators sort of acting without really understanding what exactly they're regulating. So they're creating regulations that aren't necessarily appropriate or effective cryptocurrency industry.
So I think that's somewhat true. So it depends on the regulators, and when we talk about regulating bodies, that's normally like hundreds of people or dozens of people. So I think that they do have the information inside their bodies. The problem is that the space itself is moving so fast that a lot of things that people consider truth are changed very fast. And I think a very practical example. For a few years now, we have been the industry has been saying that having your private keys is all that you need to control the funds, and having your private keys is the most important thing. But the reality is, if you go deep in the math, what you need to be able to do is actually sign a transaction on behalf of some public address. Mm-hmm. So there is technology where you can have multiple different keys collaborating to that. So in that sense, just having one private key is not important. So when you think about all these complexities that arrive from the possibilities, it becomes really hard for the regulator itself how to do a blanket regulation for this fast-moving space. So, in my view, I think we are still too soon to regulate the industry in a strong sense. We can start talking about possibilities. We can start seeing how they would be implemented in practice. But I do think that we are still very much on the sandbox space, and will be on there for a few years. So as the month for Nash, usually we have a very open conversation with regulators, and we just tell as much as we can do, and then we get to a term where it's fair for them to affect our business, in a sense that there is low risk of problems going on there. but that's basically the goal. Like the regulators, they are in the charge of protecting the customers and protecting their economies. So if you can demonstrate that the tools and the process that you implemented in your business are doing that, then you usually have no problems.
Okay. Fabio, do you have any announcements for Nash or for any other projects that you're involved in the moment?
Right. I do have a say on Nash, which is we just told yesterday the public that we're gonna have our next quarterly report on July 27th in Boston. Mm-hmm. I think we are trying to implement this thing on the industry, which is having regular meetings with investors, right? So that's what we call our quarterly reports. So I invite everyone who is interested in Nash or has investment in Nash to visit us on the quarterly report in Boston and talk directly to the team. We may bring some surprises there, so it's always good to be present.
Okay, great. Fabio, thank you so much for your time. It's been a genuine pleasure to talk to you, and I'm looking forward to seeing you at the Barcelona Trading Conference.
See you there.